So the next topic is blockchain applications in banking. So, and here, let me start by highlighting that blockchain has become a long way since its inception in 2008 as um, underlying technology for the Bitcoin, and what began a theoretical concept for cryptocurrency transactions, and it has evolved into a practical financial tool that's reshaping banking operations. So I want to emphasize that the adoption of blockchain and banking isn't just about cryptocurrency anymore, for sure. You might be surprised about that, but we are seeing its implementation and clearance in settlements, for example, in payments and in smart contracts, which has effectively revolutionized traditional banking processes. And what I find particularly interesting here is how platforms like, for example, Ripple have enabled direct bank-to-bank transfers with complete end-to-end visibility. And because this is a significant departure from traditional banking methods. And throughout this lecture, we will examine various applications of blockchain and banking and understand their implications, and we will explore how they are changing the financial landscape. And I believe this knowledge will be crucial for you and for your future careers in digital finance. So the next slide. Now let me walk you through the fascinating evolution of blockchain in banking, which I've had the privilege of observing over the past decade, for example. But for example, when blockchain first emerged in 2008, it was primarily conceived as the technology underlying Bitcoin, as we said before. I even remember how skeptical many banking professionals were about its potential applications beyond cryptocurrency. And what's particularly interesting here, and I want to emphasize this point, is how the technology has evolved from being just a cryptocurrency platform to becoming a transformative force in mainstream banking operations. So, and now let me share something from my experience. And that is the real game changer came when platforms like Ripple demonstrated how blockchain could facilitate direct bank-to-bank transfers with complete transparency. And this was a watershed moment that opened many eyes in the banking sector. So, and I've seen firsthand how the adoption of blockchain has revolutionized core banking functions, and we are talking about fundamental changes in clearance and settlement and payments and even in smart contracts. And these aren't just incremental improvements because they represent a complete reimagining of how banking operations can work. And what is really interesting here about all of this evolution is that we are still in early stages, as to my opinion. And the technology continues to mature, and new applications are being discovered regularly. So the next slide. Now, I would like to draw your attention on the fundamental differences between traditional banking systems and blockchain-based banking systems. So in the traditional system that I think we are all familiar with, so banking operations are highly centralized and with multiple intermediaries involved in every transaction. And here, each intermediary maintains their own ledger, which often leads to reconciliation issues and delays. And what is interesting about the blockchain banking system is that its a decentralized nature, because instead of multiple separate ledgers, so we have a single distributed ledger that's shared among all participants. And this fundamentally changes how transactions are verified and how they are recorded. And now let me give you a practical example of this. For example, in traditional banking, when you make an international transfer, your money might pass through 3 to 4 different banks. So each taking time to verify and to process the transaction. And with blockchain, this same transaction can be completely nearly instantaneously through direct peer-to-peer transfer. So, and the implications of this shift are profound, because we are seeing reduced costs, faster processing times, enhanced security, and even improved transparency. And these benefits are why major banks worldwide are investing heavily in blockchain technology. So, and I want you to understand that this isn't just a theoretical comparison, because I think it represents a paradigm shift in how banking service can be delivered and consumed. So the next slide. In this slide, I want to explore the multiple ways blockchain technology is revolutionizing the banking sector, because and I will share my insights on the most significant transformations. For example, from my experience working with the financial institutions, I can really tell you that blockchain's impact extends far beyond the cryptocurrency transactions, because what we are seeing in the is a fundamental restructuring of how banking services are delivered. And now, let me emphasize the crucial point. Blockchain isn't just enhancing existing banking processes, it's completely transforming them. And you can think about cross-border payments, for example, or securities trading and regulatory compliance. So in my discussions with the banking executives, for example, these are consistently highlighted as areas seeing the most dramatic improvements. And what I find here particularly fascinating is how blockchain is reducing infrastructure costs. For example, industry analysis suggests that banks could save between 15 up to $20 billion annually just by implementing blockchain in cross-border payments, for example, or in security trading or in compliance operations. And if we turn back to the real practice example, so that I have observed actually, that I can say transactions that previously took weeks to process now are being completed in hours. And so this isn't just an improvement in efficiency, it's a complete reimagine of how banking services can be delivered. And now I wanted to understand finally that these transformations aren't just theoretical possibilities, so they are happening right now in banks across the globe. Now, let me share with you some real-world examples of how major banks are implementing blockchain technology. Having worked closely with financial institutions, I think I have witnessed this transformation firsthand. So, and first of all, I want to highlight a particularly impressive case. For example, JP Morgan's interbank information network. So, and what is the most exciting here for me about this implementation is how it's revolutionized global payments transactions. For example, you can just imagine processes that used to take weeks are now completed in hours. And this is a remarkable improvement in efficiency. And let me put this into perspective with some numbers that I find quite striking. For example, based on the extensive industry analysis, so it's estimated that blockchain implementation could reduce banks' infrastructure costs by 15 up to $20 billion per year. So this is a significant saving that directly impacts the bottom line. And what is the second fascinating thing about these implementations is how they are eliminating duplication and intermediaries. So in my experience, this is particularly evident in clearance and settlement processes where the optimization is truly significant. And now let me emphasize something important here. So these aren't just pilot projects anymore. So we are seeing real practical applications that are fundamentally changing how banks operate. And this technology, I would say it has moved beyond the proof of concept stage and is delivering tangible benefits so far. So, and I believe that this is just the beginning, because as more banks adopt blockchain technology, so we'll see even more innovative applications and efficiency gains. So the next slide. And now let me address a critical aspect of blockchain implementation and banking, the security considerations. And this is an area I've studied extensively, actually, and it presents both opportunities and challenges. And first, let me highlight what I consider to the blockchain's primary security advantage: its decentralized and cryptographic nature. So in my experience, this effectively eliminates single points in failure, making the system inherently more secure. And however, I want to draw your attention to several key challenges that banks must address. For example, complex key management is one that particularly concerns me. So I have observed that many security teams struggle with the knowledge gaps in this area, which can create vulnerabilities. And now let me share something that keeps many banking executives awake at night. So the threat of quantum computing. So while it's not an immediate concern, but I believe banks need to prepare for its potential impact on current cryptographic methods. And another challenge I want to emphasize is the risk of 51% attacks. So because while relatively rare, these attempts to alter chain history and demonstrates systemic risks that bank must prepare for. And what is crucial in my view is implementing comprehensive best practices, because these include multi-layered defenses, and extensive penetration testing, and air-gapped data backups, and strict key access restrictions. And I've seen these measures significantly reduce security risks when properly implemented. I cannot stress enough the importance of fostering decentralized participant diversity, because in my experience, this is one of the most effective ways to maintain system integrity. So the next slide. Now let me address one of the most critical challenges in blockchain banking, which is data confidentiality. And having worked in numerous banks, so I can tell you that this is absolutely crucial for maintaining consumer trust and regulatory compliance. Because what I want to emphasize here first is the fundamental challenger, because banks handle extremely sensitive customer information. And also in my experience, this requires implementing stringent privacy protections that go beyond standard blockchain features. And now let me point out a significant concern, which is public blockchains inherently lack confidentiality due to their transparent data distribution. Because this is why I always advise banks to carefully consider their blockchain architecture choices. And I'm particularly excited about the advances in privacy enhancing cryptography, because technologies, for example, like zero knowledge proofs, ring signatures, committed encrypted transactions are, in my view, game changers for in terms of maintaining confidentiality while preserving blockchain's benefits. And one solution I've seen work effectively here is the use of enterprise blockchains that limit data viewing to verified participants only. And this approach, in my experience, strikes a good balance between transparency and privacy. And what I find fascinating here about this challenge is how it's pushing the boundaries of cryptographic innovations, because banks are essentially having to reinvent how they think about data privacy in a distributed system. So the next slide. And now I want to address what I consider one of the most pressing challenges in blockchain banking. That is the issue of interoperability, so-called interoperability. And from my experience, for example, working with various banking systems, this is a really crucial hurdle we need to overcome. Because now let me start by highlighting the core of this problem, because we have diverse blockchain platforms like Ethereum, Hyperledger Fabric, R3 Corda, for example, and Quorum, and etc. Each operating on different consensus mechanisms and using different coding languages, for example. But in my work, I've seen how this diversity creates a significant integration challenges. And what I find particularly problematic is the current solution, manual reconciliation through trusted intermediaries, because this essentially negates many of the efficiency benefits that blockchain promises. And I'm cautiously optimistic about emergent solutions also, like, for example, Polkadot and Cosmos, which offer interchain messaging protocols. But however, I must be honest with you, these solutions are still in their early stages, and I think they need further development. And one aspect that particularly concerns me is the increasing complexity of bridge architectures. Because while they are successfully connecting platforms, they are also introducing new layers of complexity that need to be managed. And the fragmentation across networks, whether it's data, value, or process fragmentation, is something I've seen cause significant operation challenges for banks trying to implement blockchain solutions. The next slide. Now let me share my insights on a crucial decision that banks face when implementing blockchain, choosing between open and closed networks. And this choice, in my experience, fundamentally shapes the entire implementation strategy. And now let me start with the public permissionless blockchains, like, for example, Bitcoin, because while they offer a complete decentralization and transparency. I have observed actually that they present significant privacy challenges for banking operations, and this is a trade-off really that needs careful consideration. And what I find particularly interesting in this, in the trend toward private permission blockchains, that is from my experience working with various banks, I can tell you that these offer better privacy controls and centralization options through the cost of reduced accessibility. And I want to highlight an emerging solution that I find promising, that is hybrid blockchains, because these attempt to balance the benefits of both models, and I've seen some successful implementations in practice. And here is an important observation from my years in the field, because most banks ultimately opt for private blockchains. And the reasoning, which I fully understand, is that they need to control membership while still leveraging security mechanisms like cryptography and consensus protocols. And what fascinates me about this choice is how it reflects the broader tension in banking between innovation and control, because banks must balance the need for technological advancements with their regulatory obligations and security requirements. The next slide. And now I want to discuss what I consider one of the most critical technical challenges in the blockchain banking, which is scalability and performance. And I can tell you this is a make or break issue. So let me share some numbers that I find particularly concerning. For example, public blockchains typically handle only 15 up to 45 transactions per second. And from my experience in banking operations, this is woefully inadequate for the large volume banking environments. And what I really find particularly challenging here is the data storage dilemma. Let me explain why this worries me. So expanding block size might seem like an obvious solution, but it comes with a significant risk because increased centralization. And this goes against one of the blockchain's fundamental principles. So I have observed actually that this scalability challenge creates a real bottleneck in adoption, because many banks I have worked with are hesitant to fully commit to blockchain implementation precisely because of these performance limitations. And now let me be clear about something I've learned, because, for example, solving the scalability issues isn't just about technical improvements. So it requires a careful balance between performance, decentralization, security. So what we in the industry call the blockchain trilemma. And what excites me here, however, is the rapid development of solutions to these challenges, because I'm seeing promising innovations in, for example, layer 2 scaling solutions and new consensus mechanisms that could help address these limitations. And the next slide. And by this, I would like to address a crucial aspect of blockchain implementation in banking, which is standardization. So from my years of experience, I can tell you that this is fundamental for achieving widespread adoption of blockchain technology. And now let me start with what I see in the core as the core challenge. That is the lack of common standards in blockchain technology. So I have actually witnessed firsthand how fragmented development efforts create significant obstacles to interoperability, security, and also scalability. And what I find here encouraging is the convergence we're seeing among global regulatory and industry organizations. And I'm particularly excited about the frameworks being developed that focus on semantics, data formats, and also network interfaces. And these are crucial for facilitating integration. Let me highlight the importance of ISO standards in this context, because from my experience working with various banks, these standards around reference architectures and security best practices and governance processes, as to me, are becoming increasingly vital. And one approach, for example, that I've seen work particularly well is the adoption of compliant software development kits and prototypes. And I believe actually this encourages uniformity across implementations, which is exactly what the banking sector needs. And what is interesting for me about this standardization is how it's enabling mechanism for data sharing between blockchain networks. And for example, in my view, this is crucial for creating a truly interconnected banking ecosystem. So the next slide. Now let me introduce you to one of the most exciting developments in blockchain banking, asset tokenization. And from my experience in the field, so I really believe this is revolutionizing how we think about asset management and payments. What exactly is tokenization? So let me explain it in practical terms. So it's the digital representation of real-world assets on blockchains. And I've seen, for example, this enable truly frictionless exchange in ways that weren't possible before. And now let me share some specific areas where I have seen banking experiments focus. For example, trade finance, securities, syndicated loans, property also. And the possibilities here are truly transformative. And what particularly excites me about the tokenization are its key benefits, because we are seeing enhanced liquidity through 24/7 trading, 7 days trading. And what I find fascinating is how it maintains transparency in asset flows while preserving privacy, so a crucial balance in banking. And however, I want to be candid about the challenges, because one of the biggest hurdles I have observed here is reconciling these tokenized ecosystems with legacy accounting and reporting mechanisms. And it's not a simple transition. So, now let me emphasize why I believe this is so revolutionary. So because we are looking at a complete reinvention of banking transaction workflows, asset custody and product accessibility. And in my view, this is fundamentally changing how assets become tokenized and traded. So today, by this slide, I'd like to explore how tokenization is revolutionizing the way banks handle assets. So let me explain this by means of the practical examples. So in my experience working with the banking systems, I've really seen how tokenization experiments are primarily focused on the 4 key areas, like trade finance, securities, syndicated loans, and property. And these are the areas where we are seeing the most immediate impact. So let me highlight the key benefits that make tokenization particularly attractive. And first is that it enables 24/7 trading, which dramatically enhances liquidity. Second issue, it provides unprecedented transparency in asset flows while maintaining essential privacy, a crucial balance in banking. And however, I should point out that we are facing some significant challenges, and one of the biggest hurdles here I have encountered is the need to reconcile these new tokenized ecosystems with the traditional content and traditional reporting systems. And it's not as straightforward as it might seem. And looking ahead, I really believe the potential impact is really extraordinary, because we are not just talking about minor improvements, because we are looking at the complete reinvention of banking transaction workflows, for example, asset custody, and how products are assessed and accessed as well. And as more assets become tokenized, so the entire landscape of banking services is transforming. The next slide. So now let me explain how blockchain technology is transforming real-time gross settlement systems, or RTGS. So as we commonly call it in the banking sector. And this is particularly fascinating because it addresses a long-standing challenge in interbank transfers. So you see, RTGS has been around for decades, handling large interbank fund transfers. While it does complete these transfers instantly, the traditional system has significant drawback. So that is, it relies on a fragmented transaction steps that often require mutual reconciliation. And in my years of studying financial systems, this has been a persistent pain point. And what makes blockchain particularly exciting in this context is its innate real-time verification capabilities, because these capabilities allow central banks to do something remarkable, and they can upgrade, for example, their entire RTGS infrastructure to achieve what we call end-to-end straight-through processing. So, and now I want to emphasize at this point, because it's crucial, because by implementing blockchain in RTGS, so we're not just making incremental improvements, so we are fundamentally enhancing the efficiency and security of high-value transactions between banks. And this is a real game changer for the speed and reliability of large-scale financial operations. The next slide. So now let's talk about one of the most exciting developments in central banking, which is central bank digital currencies, or CBDS. And in my view, this represents a momentum shift in how central banks are approaching blockchain technology. So from what I've observed in recent years, CBDCs are more than just a digital version of traditional currency. So I think they represent a fundamental rethinking of how central banks can leverage blockchain to enhance, for example, monetary policy implementation and even financial stability. And what is fascinating about CBDCs is how they bridge the gap between traditional central banking and modern digital finance, because they maintain the trust and stability of central bank money while introducing the efficiency and programmability of blockchain technology. So in my interactions with the central bankers worldwide, I actually noticed growing interest in CBDCs for several compelling reasons, because they offer, for example, improved payment system resilience, they offer reduced settlement risk and enhanced cross-border payment efficiency, and plus they provide central banks with a better visibility into money flows while maintaining appropriate privacy levels. So, and let me emphasize that we're still in the early stages of CBDC development, but here the potential implications for monetary policy transformation and transmission and financial inclusions are profound. This is why I believe understanding CBDCs is crucial for anyone looking to grasp the future of central bank. The next slide. So now let me share something critical about trade finance that I have observed throughout my career. So, and it's still heavily dependent on the physical documents like letters of credit, or which are unfortunately prone to foreigners, for example. But this is where blockchain comes in a game-changing solution, as a game-changing solution. So what is really exciting here about the blockchain and trade finance is how it establishes a shared record of transaction milestones and documentation, because all counterparties can now gain real-time visibility into shipment progress, verify, for example, authenticity and release payments with the confidence. So, and we now can put ourselves in the perspective with some numbers. For example, mass adoption of the blockchain trade platforms could prevent billions in annual losses that currently occur due to the documentation discrepancies. And that's a significant impact on the bottom line. And here, one of the most innovative aspects I've seen in the banking sphere is the integration of smart contracts, because these automatically enforce contractual terms, which dramatically limits disputes. And furthermore, the enhanced transparency helps banks better identify potential money laundering risks associated with trade flows. And I'm really particularly impressed here by the ongoing development of ship tracking, for example, in terms of by means of the IoT integrations. IoT means Internet of Things. And these systems really enrich data sharing across supply chains and helping us pinpoint bottlenecks and forecast working capital needs, and with unprecedented accuracy. So the next slide. Now, I want to compare the traditional trade finance model with its blockchain-based counterpart. And I would like to show you why I'm convinced that the blockchain represents a significant leap forward in this field. So in my experience, working with the trade finance, and the traditional model has always been plagued by multiple pain points. For example, extensive paperwork, time-consuming manual processes, and numerous intermediaries. And each of these factors introduces delays and potential points of failure. Now let me walk you through how blockchain transforms this landscape. First, it digitizes all documentation, creating an immutable record that all parties can trust. And second, it enables real-time verification of transactions and automated compliance checks. And third, it significantly reduces the number of intermediaries needed. And what is of the most interest for me here is how this new model addresses the age-old problems of fraud and duplicate financing, for example, because with the blockchain, we have a single source of truth that all participants can access, making it virtually impossible to use the same documents for multiple financing. And what is the result here? From what I've seen in pilot programs, for example, processing times and reduced from days to hours, and costs are cut significantly, for example, and the risk of fraud is minimized. And this is why I believe blockchain-based trade finance isn't just an improvement, it's a complete reimagining of how trade finance should work. The next slide. So now let me share with you a practical example of how blockchain technology can be implemented in the letter of credit process, for example, because this prototype architecture represents what I consider to be a breakthrough in trade finance digitization. So therefore, from my experience working with the different staffs implementing traditional letters of credit, so I know how complex and time-consuming the process can be. And what you are seeing here is a streamlined blockchain-based approach that fundamentally transforms this process. So let me walk you through the key components of this architecture, because the beauty, as to me, the beauty of this system lies in its ability to connect all participants. So the importer, exporter, and their respective banks in a single, I would say, secure network. And each party has has real-time access to the information they need while maintaining appropriate levels of privacy and security. And what is particularly innovative here about this architecture is how it handles document verification and payment triggers, because smart contracts automatically validate compliance with letter of credit terms and significantly reducing the risk of human error and the time needed for processing. So in my view, this prototype represents the future of trade finance. So, and I've seen similar architectures reduced processing time from weeks to days, while simultaneously increasing transparency and reducing fraud risk, for example. It's a perfect example, as to me, of how blockchain can solve real-world banking challenges. So the next slide. Now I want to explain why I'm particularly excited about the smart contracts in the banking. And these self-executing contracts are, as to me, are transforming how we handle complex banking agreements, making manual oversight increasingly obsolete. So now let me share the primary applications where I have seen smart contracts make the biggest impact. So we are revolutionizing payments, trade finance, syndicated loans, for example, bonds, derivatives, and identify or access management. So, and the scope of this application is truly remarkable. So, what is the most compelling about smart contracts is their ability to verify conditions digitally and execute automatically. And from my experience, I can tell you that this is a really fascinating thing, because no more waiting for manual verifications or dealing with intermediary delays. So, and now let me highlight the three key benefits that make smart contracts particularly valuable in banking. First, they significantly accelerate settlement times. So what used to make days now happen in minutes. And second, they provide improved auditability. That is, every action is recorded and traceable. And third, so they dramatically reduce disputes. So when, for example, contracts are being executed automatically based on predefined conditions, and there is less room for disagreement. So I believe this technology represents one of the most significant advances in banking operations since the introduction of digital payments, and the reduction in intermediary dependency isn't just about cost savings, so it's about creating a more efficient and transparent and reliable banking system. So the next slide. And now let me explain why I am particularly enthusiastic about blockchain's potential in so-called Know Your Customer or KYC process. So I can tell you for sure that this is an area ripe for innovation. So in my experience, one of the biggest challenges banks face in the repetitive nature of KYC verification is connected to that each bank independently collects and verifies the same customer information, leading to duplication of effort and increased costs. And blockchain fundamentally changes this dynamic. And what excites me most about the blockchain-based KYC is its ability to create a shared, immutable record of verified customer identities. And once a customer's identity is verified by one bank, so this information can be securely shared with the other authorized institutions, with, for example, with the customer's consent or of course. Also, let me share a striking statistic I have really encountered. So banks typically spend between $60 million up to $500 million annually on simple KYC compliance. So with the blockchain, otherwise, we are looking at potential cost reductions of up to 50%, along with the significant improvements in verification speed and accuracy. And in my view, the real power of blockchain and KYC lies in its ability to balance three crucial elements, which are security, efficiency, and also regulatory compliance. And it provides an auditable trail of all verification activities while protecting sensitive customer data through advanced cryptographic technologies. The next slide. So by this, I want to discuss how blockchain is revolutionizing the syndicated loan market. So an area where I've seen significant inefficiencies in traditional processes. So, and one of the biggest challenges has also been the has also been the lengthy settlement times. Traditionally, these complex transactions can take weeks or even months to settle due to the number of parties involved and the amount of manual process required. And now let me explain why blockchain is such a game changer in the space. So by creating a shared and transparent ledger that all participants can access, so we really eliminate the need for multiple versions of loan documentation and reduce reconciliation efforts. This is something I've seen transform settlement times from weeks to days. And what is impressive here is how blockchain improves transparency throughout the entire loan life cycle, because all participants from lead arrangers to even individual lenders, they all can see the same information in real time. This really significantly reduces communication overhead and even potential misunderstandings. And in my view, here, one of the most valuable aspects is how blockchain automates many of the compliance and reporting requirements. Because here, smart contracts can enforce loan terms automatically, ensuring that all parties adhere to the agreed upon conditions and reducing the risk of disputes. The next slide. Now let me explain why I'm enthusiastic about blockchain's impact on asset management based on my experience in this sector. And what I find here the most revolutionary thing about blockchain is how it creates a consolidated tamper-proof ledger. Because this ledger becomes your single source of truth for tracking transactions. And not only transactions, but also valuations and analytics. And also, I've never seen such clarity in client positions tracking before, to be sure, to be honest. So let me highlight a crucial advantage here, the ownership verification. Because with blockchain, we can ensure compliance around investments suitability with unprecedented accuracy. And what's particularly valuable is the system's ability to create timestamp trackers of threshold breaches. And here with it significantly enhances our governance capabilities. And here also, I would like to emphasize how this transforms daily operations, because GAN are days of reconciling multiple databases and dealing with conflicting records. So we, when all participants work from the same verified ledger, we eliminate countless hours of reconciliation work and reduce the potential for errors. And also from my perspective, this actually represents more than just technological advancement. So I think it's a fundamental shift in how we approach asset management, because the transparency and immutability of blockchain create a level of trust and efficiency that was simply impossible with the traditional systems. So the next one. Now, I would like to share my insights on how blockchain is transforming one of the banking most challenging areas, which is cross-border payments. And I think this is an area where I have seen actually significant insufficiencies in traditional system. So now let me paint a picture of the current situation. That is, traditional cross-border payments typically involve multiple intermediary banks, and each adding their own processing time and fees. And from my experience, otherwise, this can result in transactions taking days to complete and carrying substantial costs. And what is the most interesting here is this context of its ability to create direct payment corridors between banks. Because I've seen, for example, this reduce transaction times from days to minutes, and costs also from dollars to cents. This is really particularly impactful to remittances and international trade payments. So the next slide. Now let me share with you what I consider one of the blockchain's most valuable features for banks, which is its ability to streamline regulatory compliance. And this is particularly relevant given the extensive documentation and reporting requirements that banks face today. I know firsthand actually how operationally burdensome it can be to fill in these requirements manually. But what makes blockchain particularly powerful here is its ability to establish complete and indelible records with the embedded time stamping and proving that compliance controls are followed. So, and let me highlight something. That I find fascinating about blockchain's impact on transaction transparency. Because the technology, for example, allows us to surface risky behaviors earlier, which is crucial for compliance, for example. And moreover, it enables dynamic regulatory monitoring, and something that was nearly impossible with traditional systems. And what I have really observed in pilot programs is particularly encouraging. For example, when multiple entities share the same blockchain infrastructure, the reliability of compliance data improves dramatically. And I think this shared integrity across entities doesn't just benefit individual banks, so it enhances the entire oversight process. So, and finally, in my view, this represents a fundamental shift in how we approach regulatory compliance, and instead of compliance being a burden, also, so blockchain makes it an integral part of every transaction, improving both efficiency and accuracy. Now let me walk you through the next blockchain technology, which is revolutionizing risk management in banking. So, and here I'd like to highlight three critical aspects that make this transformation possible. First, I want to emphasize how shared immutable records are fundamentally changing our approach, for example, to institutional memory. So when all participants have access to the same unalterable historical data, the quality of risk insights improves dramatically. And I have really seen this in practice, where banks can now make more informed decisions based on the comprehensive and trustworthy historical data. And now let me explain how this translates into practical applications. So with blockchain, we are seeing a shift toward more sophisticated data-driven decision making. And for instance, when accessing client risk scores, so banks can now utilize automated systems that draw from a broader, more reliable data pool. And it's particularly fascinating, I think, how this automation reduces human bias in risk management. So, and in my view, the most exciting part here is the enhanced transparency in risk management, because through blockchain, we can now identify concentrated exposures much earlier and conduct more accurate predictive stress testing and better forecast capital adequacy. And from my experience, for example, so I have observed how this transparency had transformed counterparty risk management from a reactive to a proactive access. Now I would like to delve into one of the most compelling advantages of blockchain technology, which is its ability to combat fraud in banking operations. And this is something I'm particularly passionate about, because I have witnessed firsthand how traditional banking systems can be vulnerable to various types of fraud. So now let me start by addressing a critical issue, which is internal control gaps. So in traditional banking systems, fraudsters often exploit these gaps that arise from fragmented information and excess asymmetry. And however, with blockchains, we see a fundamental shift. So because the technology inherently shrinks these vulnerability surfaces by making any attempted deception immediately, I would say, immediately detectable through data inconsistencies. And what is of the most powerful thing here about the blockchain's fraud prevention capabilities, it's tamper-proof audit trails, because every transaction is time-stamped and immutable, making it virtually impossible for bad actors to cover their tracks. And I can tell you from my experience that this feature alone has really revolutionized how banks approach fraud prevention, for example. But here's something crucial that I want you to understand. That is, while blockchain significantly enhances, for example, fraud prevention, so we must remain vigilant about collusive human-driven fraud, because this type of fraud, which crosses system boundaries, remains an enterprise risk that requires layered defenses. And this is why I always emphasize the importance of combining blockchain with the other security measures. So, the end result, and this is what excites me most, actually, is a banking system with the unprecedented levels of integrity and accountability. So we are not just detecting here fraud faster, but we are preventing the fraud from occurring in the first place. The next slide. So now let me share with you what I consider one of the most transformative potential impacts of blockchain technology and its ability to promote financial inclusion. So, and statistics are quite striking here, because approximately 1.7 billion people worldwide still lack access to basic banking services, despite many of them having mobile phones. What really excites me about the blockchain in this context is how it's breaking down traditional barriers. So I have really observed how blockchain-based financial services are creating new pathways for participation by eliminating the need for conventional intermediaries. And this is revolutionary for communities that have historically been excluded from the banking system. So now let me highlight a particularly innovative solution, which is decentralized identification. So, and in my experience working with the financial institutions, I've seen really how traditional know your customer or KYC requirements often create insurmountable hurdles for marginalized communities, for example. But blockchain technology is changing this dynamic completely, because the beauty of the system is that it allows to secure verifiable identification without the traditional paperwork burden. So something else I find particularly promising here is the emergence of transparent peer-to-peer platforms, because these platforms are fostering direct engagement between lenders and previously unbanked populations. And when we look at the regional distribution or of, say, unbanked populations shown on our chart. So we can see the enormous potential impact this could have, especially in developing regions. So this technology isn't just about banking, it's about creating economic opportunities for billions of people. And that's why I really believe financial inclusion might be blockchain's most significant contribution to the global financial system, even. The next slide. So now I would like to address what I consider to be the elephant in the room. So it's the significant challenges that banks face when implementing blockchain technology. So while the benefits are compelling, it's crucial to understand the hurdles we need to overcome. And let me start with the technical challenges that I have observed in this field of banking. So integration complexity is a major issue, as it was said before. That is, banks are dealing with legacy systems that weren't designed with the blockchain in mind. And process reengineering needs are extensive, and we are still grappling with the certain limitations in cryptographic algorithms, for example. And I have also seen firsthand how platform fragmentation can create serious concerns for banks trying to implement blockchain solutions. And what I find particularly challenging here, and what keeps many banking executives awake at night, so is the regulatory uncertainty, and especially around crypto assets. However, it's not all doom and gloom, and I'm encouraged by several factors that are driving adoption forward. So first, we are seeing increasing regulatory endorsement of blockchain technology. This is really crucial because it provides banks with the confidence that they need to make forward and implementation. And additionally, platforms are maturing at an impressive rate, becoming more sophisticated and reliable here. So what is the most interesting is how changing customer expectations are pushing banks toward blockchain adoption, because today's customers demand faster and more transparent services, and blockchain is increasingly being seen as the solution to meet these demands. And also from my experience working on the financial institutions, so I can tell you that success in blockchain implementation often comes down to how well these challenges are anticipated and addressed in the planning phase. The next slide. Now let me share my vision of where blockchain technology is taking us in the banking sector. And based on my previous experience and research, I have identified 6 key transformational areas that I believe will reshape banking as we know it. So first, let's talk about optimized data sharing. So what is of the most interest here about this is how blockchain enables secure data sharing across different bank departments. So I've seen, for example, how this breaks down traditional silos that have plagued banking operations for decades. And the automation gains are particularly impressive as well, because in my work with the various banks, I have really observed how blockchain can automate numerous manual processes that previously required significant human intervention. And this really leads directly to my next point, faster settlements. And the impact on transaction process and times is nothing short of revolutionary. And when it comes to cost reductions, so the numbers are compelling as well, because we have analyzed numerous case studies where blockchain integration has significantly reduced operational expenses. But what I find even more fascinating is how formally siloed processes are becoming integrated. And now let me emphasize this final point, which is operational viability, which has been confirmed through numerous consortia pilots. Because I've personally reviewed cases where blockchain has proven its worth in payments and regulatory compliance and trade finance and also asset tokenization. And the most exciting part here is that we have just scratching the surface, as to my opinion. So every week I'm seeing new applications and use cases emerging that suggest we are on the cusp of the fundamental transformation and how banking services are delivered. So the next slide. And here I'd like to share some real-world insights about blockchain implementation in banking, drawn from the actual case studies I have analyzed. So while I should note the most banks' blockchain projects are still in the pilot stages or proof of concept stages, so we are seeing some fascinating patterns emerge. So, and what I find here particularly instructive about these case studies is how they are helping us develop best practices in several critical areas. Because, for example, let me break this down for you. First, we are learning valuable lessons about the governance and how to structure decision-making in a decentralized environment, for example. And the architectural considerations are equally important. And I have observed actually how different banks are approaching these challenges in innovative ways. And here I'm particularly interested in the change management aspects as well. And from my experience working with various institutions, for example, I can tell you that managing the transition to blockchain technology is often as challenging as the technical implementation itself. So, but what's really catching my attention is how banks are measuring and maximizing their return on investment. One of the most encouraging aspects I have observed in the growing diversity is a growing diversity of participants in consortium testing. And this is really crucial because it helps validate the scalability of blockchain solutions in real-world conditions. And finally, when I look at these case studies collectively, so three benefits consistently stand out. The first one, enhanced security. The second, improved transparency. And finally, increased accuracy. And these aren't just theoretical advantages, so they are being demonstrated in real banking environments, and which I found incredibly encouraging for the future of this technology. Let me share with you some compelling real-world examples of blockchain implementation in major banks. And these cases are particularly interesting because they show different approaches to blockchain adoption. So let's start with the JP Morgan, which made a significant move on April 12, 2021. So, and what I found about their case is most impressive is that they were focused on to improving money transactions and they specifically targeted payment processing and verification times for large payments, for example, and the results have been remarkable. And Bank of America presents another interesting case study. For example, their involvement with the utility settlement coin, or USC, which was their project, and it particularly caught my attention. Indeed, and from my analysis, for example, this may demonstrate how traditional banks are exploring blockchain, not just for internal processes, but for the industry-wide solutions. And another example is HSBC's case, which is equally compelling, and I have followed their involvement with the TradeLens platform closely. And what makes their approach networthy is how they're leveraging blockchain specifically for trade-related operations. And I also observed how this platform is transforming traditional trade processes into more efficient and transparent operations. And what I find most instructive about these cases is that each bank has taken a slightly different approach to blockchain implementation, yet all are seeing significant benefits in their specific areas of focus, and these aren't just experimental projects anymore. So they are real-world applications delivering, as to me, tangible benefits. So let us continue sharing more case studies of blockchain implementation and global banking. And therefore, these examples demonstrate different approaches to solving specific banking challenges. For example, Citigroup's involvement with the Waltron platform particularly interests me. And from my analysis of the approach, they have focused specifically on securities trading, which represents a significant shift in how these transactions are processed. And what I find compelling about this case is how they are using blockchain to address the complexities of securities markets. And also, Standard Chartered's work with the Marco Polo platform, for example, presents another interesting angle because their focus on trade finance solutions shows how blockchain can transform traditional banking processes. And I have truthfully followed their progress closely. And what stands out to me is their practical approach to solving real-world trade finance challenges. And also, DBS Bank's case is equally noteworthy because particularly they work with the Partia platform. And what is fascinating about this case is their approach is on the focus on supply chain finance. From my experience, for example, analyzing various implementations, their solution demonstrates how blockchain can bridge the gap between financial services and supply chain management. And the key lessons I've drawn from these cases is that successful blockchain implementation often comes from focusing on specific business problems rather than trying to transform everything at once. So, and each of these bank has found their niche in blockchain applications, and that's what makes their cases so instructive, as to me. So now let me share with you the final set of compelling case studies that I believe demonstrate the diverse applications of blockchain in global banking. For example, the Commonwealth Bank of Australia's involvement with the Corda platform is particularly fascinating because from my analysis of their implementation, what stands out of their innovative approach to trade finance I've closely monitored that progress, and what is impressing me most of all is how they are or they have adapted blockchain technology to meet the specific needs of the Australian market and their implementation trade operations. And also BNP Paribas's case with the WePoint trade, which is a platform which offers another interesting perspective. So what is compelling about this approach is how they focused on creating a collaborative trade finance ecosystem, because uh, after I've studied their implementation extensively and their success in bringing together multiple stakeholders on a single platform, as to me is quite remarkable. And also Deutsche Bank's work on Hyperledger Fabric, uh, uh, it seems to me presenting what I consider a textbook example of enterprise blockchain application, because their focus, for example, on creating scalable enterprise solutions demonstrates a deep understanding how blockchain can be adapted for institutional banking. And even having analyzed their approach, I'm particularly impressed by how they have managed to balance innovation with the stringent requirements of German banking regulators. And what makes these cases is especially valuable for our understanding is how they demonstrate different approaches to similar changes across diverse regulatory environments and market conditions. And each bank has found unique ways to leverage blockchain technology while maintaining compliance with their respective regulatory frameworks. The next slide. Now let me explain why I believe banking consortia are absolutely vital for the future of blockchain in our industry. For example, from my experience working with various financial institutions, I have observed that collective action is far more effective than individual efforts. And now let's talk about risk pooling first. So I've seen how groups like R3 are accelerating blockchain progress by, for example, sharing the risks of innovation among multiple participants. And this is crucial because no single bank wants to bear the entire burden of experimental technology development. And what I find here particularly valuable about consortia is how they centralize learnings. And you can think of it as a collective knowledge base. For example, I have participated in several consortium projects where the shared insights have saved individual banks months, but if say not years, of dependent research and development, for example. And the scale advantage is another aspect I'm excited about, because when banks pool their resources, they can implement blockchain solutions at a scale that would be impossible for individual institutions. And I also have witnessed firsthand how this collective approach leads to more robust and comprehensive implementations. And here is something that often gets overlooked, like technology access, because by participating in consortia, banks can access cutting-edge blockchain technology without making massive proprietary investments. So, and therefore, I've seen smaller banks benefit enormously from this arrangement. And finally, let me emphasize the importance of standardization, because in my view, this might be the most crucial role of consortia, because by coordinating industry efforts, we are avoiding the pitfall of fragmentation and ensuring the different blockchain implementations, those can work together seamlessly. Next slide. By this, let me explain why I'm I am particularly excited about the blockchain as a service, or BaaS platforms, and their potential to democratize blockchain adoption and banking. And from my experience working with various financial institutions, I have observed that one of the biggest hurdles to blockchain adoption is the initial investment required. And this is where BaaS comes in, because it's revolutionizing how banks approach blockchain implementation. And what is particularly compelling about this is how it allows banks to evaluate opportunities without committing to the intensive capital allocation typically associated with the full stack enterprise infrastructure development. Now, let me share what I've seen in the market, because leading technology vendors are now offering modular solutions that cover everything from payments to smart contracts, decentralized identities, and token issuance, for example. And I think that what makes this especially attractive is the pay-as-you-go model, so-called, because, for example, I have been working with the banks that have successfully tested complex blockchain applications without having to build everything from scratch. And for example, we can think about eat as try before you buy approach, which is an approach to blockchain technology, for sure. And from my observations, this has been particularly valuable for medium-sized banks, for example, that want to stay competitive but don't have the resources for large-scale blockchain development. And the beauty of BaaS model is that it allows these institutions to start small, to test what works for their specific needs, for example, and to scale up gradually. And in my view, BaaS model is democratizing access to blockchain technology in the banking sector, and this could be a game changer for industry-wide adoption. The next slide. And now, let me address what I consider to be the critical factors in the successful blockchain integration for banks. Because based on my experience working with the financial institutions, I've identified three key challenges that require careful strategic planning. First, let me talk about what I call the technology familiarity gap. The decentralized nature of blockchain represents a fundamental shift from traditional banking system. And what I have observed in the many banks, many banks are struggling with this transition because their methodological approach required is often lacking. And I've seen, for example, firsthand how this gap can slow down implementation and create resistance to change. And here is something that particularly concerns me. That is the issue of platform fragmentation and rework, because many banks, in their rush to show quick returns, are really making decisions that could lead to significant problems down the line. And I have witnessed cases where, for example, prioritizing short-term gains has resulted in platform fragmentation, ultimately causing delays in realizing the technological strategic potential. And the third aspect, which I believe is absolutely crucial, relates to the governance and innovation. Because from my experience, a successful blockchain implementation requires a delicate balance. And we need governance protocols and architectural decisions that encourage innovation while maintaining necessary controls. And what I find here the most effective is establish a flexible framework designs right from the start. And these challenges are not insurmountable, but they do require careful consideration and strategic planning. And in my view, addressing these issues early in the implementation process is simply a key to successful blockchain integration. The next slide. Okay, now we have come up to the takeaways of the whole presentation. So now let me summarize the key points we've covered today about blockchain's transformative impact on banking. And these takeaways represent that I believe are the most crucial aspects for understanding blockchain's role in modern banking. And first and foremost, I want to emphasize how blockchain is revolutionizing basic banking operations. And from my experience, the technology's ability to enable faster and cheaper payments, for example, and trading and compliance through, I don't know, shared ledgers is really truly transformative. And let me highlight the practical applications we've discussed before. Banks are actively implementing blockchain for clearance, settlements, syndicated loans, and trade finance. However, as I have stressed throughout the lecture, there are unique challenges that need to be addressed, and particular in security and privacy and in integration. And what I find here particularly crucial is the role of standardization in ensuring interoperability and scalability. And we also explored how emergent central bank digital currencies are transforming traditional banking operations. And I want to emphasize the practical improvements we are seeing, like tokenization and streaming asset management, like smart contracts. Those are automating manual processes, and also KYC processes that are becoming more efficient. And in my view, one of the most important developments is the rise of consortium collaboration driving adoption. But remember, as I've stressed today, that strategic planning remains critical for harnessing blockchain's full potential while mitigating risks. And overall, these takeaways should serve as your foundation for understanding how blockchain is reshaping the banking industry.